Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Hello and welcome. Before I start, I'd like to want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these my charts. This was all my own original work, and I think you deserve to have that. So with that, Chicago wheat. Okay, so there has and is a lot going on here in a relatively short amount of time. The most obvious ones have been the multiple contradictory head and shoulders patterns and reverse head and shoulders patterns, which gave targets and then the market took them away. However, the dominant pattern here is the fairly obvious bright red mid-February to mid-June bearish Andrews pitchfork. We are at this time in between the overhead bright red upper tie, which is currently at 550 and a quarter, and the bright red middle time below, currently at 498 and a half, I believe. Maybe a little bit lower than that, say around about a 493 level. Separate to this, there are two other features now impacting the market. Firstly, the continuing impact of the declining purple neckline extension. It's currently at 529 and a quarter. This gently sloping lower neckline has been a proxy for an attractor for the market heading lower, and specifically it also acts as a mid-May to mid-August neckline for the most recent head and shoulders pattern, head and shoulders top pattern, which is a complex head and shoulders topping action. Now, last week I left some very early potential targets below for this complex head and shoulders top, of a primary target X down at 504 and a secondary harder to reach target X1 down at 474. As I said last week, this is early on, but it might as well do it now. And then if it is negated, I can easily retire the targets below. This leads on to the second feature, and is the 38.2% absolute Fibonacci line at 520 and 3/4. This was and is being challenged last week and this week, along with the nearby March 24 low at 523 and a quarter. Both were tested back in mid-May, and they held back then, though the breach low was quite significant in size, as seems to show how little we seemingly have underneath as support until the historical congestions for ball seen between 500 down to 495, along with a little lower down the 2016 to date uptrend, which is currently at 491. Chicago corn. The dark blue mid-February to mid-April bearish shift pitchfork on my daily chart took over as showrunner for the market in June from the earlier and at the time quite successful bearish Andrews pitchfork for the same period. As you can see, it's been very good at showing the bearish angle of attack since it was created back in mid-April and fully acknowledged, as I say, in June. Thus, right now we are just ever so slightly above the dark blue middle time, as currently at 411. The market had been very recently moving down from testing and being pressured lower by the dark blue middle time since about mid-July, along with its companion, the very interesting declining green short medium moving average, currently at 412 and a quarter. That's down to the low created earlier in mid-July at 391 and a quarter, just before changeover, and by what was then the dark blue lower time at that level. For most of late July and early August, the dark blue middle time and green short medium moving average squeezed the available space between those two and the July low. I said last week, and I quote, "Eventually something has got to give," end of quote, and we may be on the verge of seeing something giving, as we are indeed within, and quite well within, as I said 3 weeks ago, and I quote, "support of dubious strength that is fairly evenly spaced out at 409, 403, until the November 2020 low at 397 and this year's low at 391 and a quarter," end of quote. I carried on looking further below, and I quote, "There is limited support below this, realistically at 386 and a half, then the August 24 and 2024 low at 385, before a low, not monthly lows, but just a low from late 2020 at 369. After this, well, we have at the bottom of my daily chart the old 2006 to date uptrend, currently at 349.5. End of quote. Those support levels and some are now resistance levels, such as the December 2020 low at 414.25. Well, they still work and we are within their grasp. However, as mentioned earlier, the descending dark blue middle time and descending bright green short medium moving average give limited room for maneuver topside unless we break through them. If prices turn back lower, this room for maneuver will become less and less until the dark blue middle time crosses down through the 391.25 level in the middle of October. As I said last week, and I quote, I do not expect to see the market wait until then. Rather, something will give way before then, I suspect. End of quote. Kansas City wheat. The major pattern here continues to be, yet again, the dark blue February to March bearish shift pitch hawk. A few months ago, it was not a great looking pattern, having had both the lower time, which is currently 457.25, and the upper time, currently 552 pierced, but not broken. Thus, both times continue to play a more significant role these days in showing the bearish angle of attack. And I should also mention the dark blue middle time, a little below the market, as this also continues to be important, and that's currently 504.75. Interestingly, since May, a new pattern has emerged, though this has also been breached, though not as yet broken, whilst at the same time some older resistances and I suppose older supports as well have influenced the market again. The new pattern started out as a double top pattern, Adam and Eve type, from the middle of May through to the middle of June. However, this pattern morphed into what was initially a small, though nowadays is quite large, breach, but repaired, and today still operational, purple expanding wedge pattern. That's currently 509 to 582. I should also point out, as I said 3 weeks ago, and I quote, I'm beginning to suspect that the purple lower trend line is now working in association with the dark blue middle time. However, I still think the dark blue bearish shift pitch hawk is the more dominant pattern and would not wish to take anything away from it. End of quote. Meanwhile, looking nearby, we have overhead now capping the market, a pair of dynamic resistances in the shape of the declining green short medium moving average, currently at 540. And the declining mauve medium moving average, currently 544.25. They're not capping it this week, but they have been doing something like that during the course of July and August. Just keep an eye on these as they provide the immediate resistance overhead on any attempt higher, yet one that will be still moving lower with the market. Now, looking even closer nearby, we have the 38.2% absolute Fibonacci line at 532.5, and a slightly lower low for August 2024 at 527. As many of you will know, I've said all along that the August 24 low was in turn created by that same 38.2% absolute Fibonacci line. These between them managed to hold up prices over June and into July, as well as over the last 2 weeks. But this week, prices are below the 38.2% Fibonacci, and they are barely holding on to the August 24 low, enough that we can even start looking at them as resistances rather than supports. This brings me to one final feature I'd like to draw your attention to, and it's one that is rich in history. Just below the dark blue lower time, we have the unreconstructed bright red December 1999 to date uptrend. That's right, an uptrend from last century that is still on my daily chart, and that's currently at 506. Please keep an eye on this uptrend as it turned the market back up in the middle of May, though this time it does not have the dark blue lower time in attendance as it did back then. But, and it is an important but it does now have the dark blue middle time in attendance, though this too is moving away lower, so please watch out. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpick and ADM Investor Service International Limited. And here comes the final important bit.